So, very good morning. I hope I'm clearly visible and audible. The screen of the computer is also visible clearly. Kindly reply me. Yes, enough. So, we'll start the session. So, in the previous session, we covered up to skepticism, inherent limitations, qualities of an auditor, all such content that we have covered in the previous session. In this session, we are going to cover an important standard, that is SA 210. SA 210. The standard is agreeing on terms of audit engagement. Agreeing on terms of audit engagement. Before I discuss that standard, there is one concept that we need to discuss. That is this particular SA 220 related one procedure we need to discuss. Suppose you newly set up, let's assume you have newly qualified as a chartered accountant and just you set up your own office. And some of your, somebody has approached you. Somebody has approached you and asking for accepting a company audit, stat audit. If a particular person approaches me and asking me to do a statutory audit under Companies Act, what would be my response? Should I directly accept it or should I consider certain things? See, accepting audit under Companies Act is a statutory audit, right? In statutory audit, you must ensure you are independent from the company. If you are not independent and accepted the audit, it's a professional misconduct. ICI will punish you, which is not, which is a violation. So you have a basic responsibility to check certain things before you accept a client. See, here it is called as client relationship. Now what we are going to understand is, we are going to understand regarding a client relationship. What you can do with a client relationship? You can accept a new client relationship. You can accept a new client relationship, or you already have an existing client. Let us assume you already have an existing client relationship. Now here, two dilemmas you may have: to continue with him or not, to continue existing client relationship or not. So one dilemma is whether to continue existing client relationship or not. Second combination is what? To accept new engagement from existing client. There are two dilemmas or two things that can happen with existing client. One thing is, we entered into an engagement with one existing client. We entered into some work. We finished it. Now, once again, he is asking us to do for next year also. So to continue or not is one question. Another question, suppose, let us assume to our existing client, we are already providing audit under Companies Act. We are already providing audit under Companies Act already. We are already Companies Act auditor. The same client is asking us to do income tax audit also. The same client is asking us to do income tax audit also. In addition to company audit, he is asking us to do income tax 44AB audit. Though the client is existing, but the work is new work for me with the client. It's a new engagement. It's a new additional work from the client, existing client. Now, when the client is asking me to accept an additional work, or the client term, whatever I was appointed, the term, the contract, the engagement is already expired. The engagement is already done. Now he is asking me to do for another term. He is asking me to continue once again. Can I do this or not? Or, all right, I mean, altogether, I may get a new client. I am getting a new client. So whether the new client relationship, should I accept or not? So these are the three questions generally you face when you enter into a practice. So you may get a new client, new work, existing client, existing work, to continue or not, existing client, whether to get a new work from him or not. These are the three things which auditor has to consider. So this point is answered by SA 220. There is a standard called SA 220, quality control of audit of financial statements. Quality control of audit of financial statements. See, parallelly, there is a standard called SQC, standard on quality control. And whereas this is, quality control, standard on auditing 220, quality control for audit of financial statements. In both these standards, the word common is quality control. What is the difference between this standard and this standard? SQC is applicable for my office. It is applicable for audit firm. It is applicable for audit firm. How the firm should be, what are the qualities of partners should be, who are all the articles, so how should we train them? So how, as a firm of chartered accountants, we should train up ourselves so that we are upmarket, we are upskilled. Whereas SA 220 speaks about when I accept an audit. No, suppose I accepted a company, let us assume Tata Consultancy Services. While rendering services to Tata Consultancy Services, suppose we are rendering audit, we are auditors of TCS. While rendering audit service, what quality norms that we should follow? Which means SA 220 discusses at client level. It discusses at client level, engagement level. Whereas SQC discusses at firm level. At firm level. SQC is much broader than SA 220. Okay, now, so when a new client is approaching me, should I accept his work or not? Or when an existing client is asking me to continue for another period, to continue for another term, should I do or not? Or an existing client is allocating me a new work, can I accept it or not? These are the questions. Now, how should I accept it? How should I accept? What points I will consider? What points I will consider? Of course, the first and foremost thing, if it is you, what you will consider? Suppose if it is me, no. First I will see, logically, am I eligible to conduct this audit? Legally, am I eligible to conduct this audit? I will check ethical requirements. The first and foremost thing what I will check is, I will check ethical requirements. See, ethical requirements also I will check when I'm interested. When I'm interested to do audit. So can I accept it or not? I need to think. Before even ethical requirements, there is a one point which you need to check. First, is client good or not? Is that person good or not? There are so many people who get service from you, but they don't pay any fee. Or who are not honest, who are not with integrity. So first and foremost thing, beyond ethical requirements, what I will check, integrity of key management or officers of the company, integrity of the key managerial persons. How the management of the company, are they with integrity? Are they honest? Are they straightforward? Yeah, they are good people. Now I need to think, okay, since they are very good, can I accept it or not? Before you accept, what you need to check? Ethical requirement. What is the ethical requirement you need to check? You need to check independence, you need to check confidentiality, you need to check objectivity, all that. Are you independent? Where it is said, example, suppose if the client is a company registered under Companies Act, you can check independence by looking at disqualifications of auditors provision. Disqualifications of auditors provisions you need to look at. Suppose you checked all the disqualification provisions and you found none of the disqualification is applicable for you. Okay, I am eligible. Okay, so client is good, I'm eligible to do audit. The third one I will have to check is, not only I'm eligible, can I do that audit? That is a very big company, 1,000 crore turnover company, 1 lakh crore turnover company, pharma company. Moreover, can I do such a kind of big company audit? So that also I need to check. So competency, my competency level I need to check. My capability I need to check. My availability of resources I need to check. My competency, capability, resources availability. Resources means what? If I accept this new client, 40 days I need to spend with him. Definitely I need to work on him for 40 days. Do I have the time? Okay, along with 40 days, I should carry 10 staff members. Do I have enough staff members with me right now? They are already on other works. So can I take them from other works and go with this client? Can I manage my resources? That also you need to check. And not only that, can you handle this particular big client? So many things are there. You don't have past experience. Can you handle it? So competence, capability, resources you need to check. Then suppose if it is an existing client, he is insisting on you, sir, please continue for next year also. Okay, just for one more year you continue as our auditor, and you checked he is honest, ethically, yeah, I can do it, and I, of course, I'm the one who did audit from the past 4 or 5 years, so he's asking you to continue me for one more year or 2 more years, right? So I need to check my past experience with the client. What are the incidents? What is my experience I gained in the past? So if it is an existing client, if the client is an existing one, whether should I continue or not, it depends upon past experience also. If at all is a new client, now only 3 points. If the client is existing one, I will have to check it. Fourth point also, if a client is new client, should I accept it or not? Only first 3 points. So that's SA 220. You see here. So SA 220, quality control of an audit of financial statement requires the firm to consider following information before accepting an engagement. See, they said firm. Which firm means what? Our audit firm. This audit firm may be sole proprietary firm or it may be a partnership firm. People generally think firm means partnership firm. No, firm means, dictionary meaning of firm means it's an entity, it's an organization, it's an enterprise, it's an establishment. Firm, or it may be a firm, or it may be a concern. The firm may be a company, the firm may be a partnership firm, the firm may be an LLP, the firm may be a sole proprietary. Firm means organization, technically meaning organization. If it registers under Partnership Act, it is called as partnership firm. That's it. If it registers under LLP law, it's called as LLP firm. If it is registering under Companies Act, we call it as company form of organization, company firm. Firm means establishment. So what points? Integrity of the key management and those charged with governance. Whether engagement team can comply with ethical requirements, whether your team, your office, are they okay with the ethical requirements? Whether your team is competent, capability, time and resources. And if the client is existing, what are the important issues arisen during previous audit? In previous audits, what issues you faced? That also take into account. Then give your acceptance to continue. That's it. So that's about SA 220. Audit procedure has to be performed before accepting a new relationship from a new client, or before continuing an existing engagement with existing client, or accepting a new engagement with the existing client. So if an existing client comes and asks me a new work, before accepting it, these 4 points I will consider. An existing client is asking me to continue existing work only, not new work. Existing work only is asking me to continue. Once again, same points. A new client is approaching for a new engagement, then I will consider only first 3 points. This can be tested for MCQ logically or true or false. That's it. Significant matters have arisen during the previous audit engagement is one of the deciding factor before accepting a new client relationship. False. As per SA 220, quality control of an audit of financial statement. While accepting a new engagement from a new client, the auditor has to consider integrity of the management, competence, capability, availability of resources, and ethical requirements. Significant matters that have arisen in past is relevant in case of existing client, not for new client. That's it. Next, part 2 of this chapter. With this part 2 discussion, this chapter will be over. Part 3, part 4, I will discuss when I'm discussing company audit. Part 3, I will discuss. And part 4, it is SQC, standard on quality control related. That I will discuss when I'm explaining standards on auditing. Now, part 2, engagement acceptance and other preliminary audit formalities. Now, there is a standard. There is a standard here. If you observe, SA 210, agreeing on terms of audit engagement. Agreeing on terms of audit engagement. What is SA 210? Agreeing on terms of audit engagement. Students directly, mug up these provisions, these standards, but understand the intention. Agreeing on terms. Terms means what? Terms and conditions. See, audit is a contract between the client and auditor, right? It's a contract between the client and auditor, right? Now, this client and auditor should discuss terms and conditions of audit, right? So what is an audit? What is auditor's duty? What is client duty? What is auditor's right? Client's right? All the terms and conditions they have to discuss, right? And we have seen in the previous session, in case of statutory audit, these terms and conditions are decided under statute. And in addition to that, you can have additional terms and terms of engagement. You can have additional terms, but these additional terms should not be against the law. That also we have seen. So why terms of engagement auditor has to see? What is the purpose of SE 210? Now, fundamental one question I will ask before I proceed. In any business contract, who will dictate? I'm asking you, who will generally dictate terms and conditions? Service provider or seller, they will decide the terms and conditions, or buyer or service receiver? Who will decide? You just imagine once what are all things you purchased in past, where and all you got services. Who decides? You fix the terms or the service provider fix the terms? Very good, excellent. In the chat box, people are replying very clearly. Service provider, seller will fix the terms and conditions. Very simple. You purchased a simple small product. What are the product usage terms and conditions? Catalog is sent by whom? Seller. You visited some salon to get some hair work and all. So who will fix the terms and conditions? Do's and don'ts. Service provider. You went to movie theater. Do's and don'ts. Terms and conditions. Movie theater owner will fix the terms and conditions. Everywhere in any business, terms and conditions are fixed by seller, because only the seller of the product, only service provider understands what are the complexities involved rather than the buyer understand. The buyer may not aware of all the formalities. See, I am not doing that business, right? How do I know what are the customary practices in a business? I don't know. As a buyer, I am ignorant of it. So it is whose responsibility? Primarily, generally, service provider or seller. Now tell me, same logic apply in audit. Who will have to, in audit, in a case of audit, who is service provider? Who is service receiver? Who is service provider? Auditor is service provider. Yes, exactly. Whereas, and the client is service receiver. So logically speaking, who understand complexities in audit? Obviously the auditor. Client may not have that knowledge. So auditor is the one who understands the complexities. So who has to fix the terms and conditions? Auditor has to fix the terms and conditions. That's why SA 210 has been brought. So it is the auditor responsibility. It is the auditor responsibility to agree on terms of audit engagement. Auditor has to educate the client. What are all auditor rights and duties? What are all client rights and duties? Auditor has to make the client understand. Tell me, can auditor prepare books of accounts and financial statements of the company where he is giving his opinion? I told no. Independence of mind, I told, right? What is independence of mind? Maker and checker. Maker and checker should be different. See, if the client prepare books and balance sheet, everything, if I am verifying, I will identify some mistake. If I prepare them, how do I verify? How do I find mistake? There is a self-review threat. There is a threat called self-review threat. So auditor has to check. Auditor has the responsibility to make the client understand what are his duties. See, generally, no, clients are, let us assume company is nothing but what? Directors. Two directors or their private company. They don't know anything about commerce, finance and all. They are some BTech or some engineering graduates, or they may not be graduates at all. okay, or uneducated, but they know how to handle the business. They thought by appointing a chartered accountant, they were thinking that CA will take care of everything. Books, finance, audit, ROC, IT, advanced tax, GST, everything they will take care. That's what these people are thinking. But we know under Companies Act, section 144, prohibited services, we should not accept certain works from the client. We should only provide audit. We should not provide any management consultancy services. That is prohibited. Only we know that. So we should tell him very clearly, dear Mr. Client, I am only for conducting audit. It is your responsibility to prepare books, to prepare financials, everything. I will not involve in that. I should not even involve in that. Even if you want me to pay higher fee, it's okay. I should not accept. I won't take it. So I should clearly tell the client. So terms of audit engagement. So auditor has to clearly explain the client. Getting it? So first, what are the terms of engagement? Here, what will issue? No, letter of engagement. What is that we issue? Letter of engagement. Letter of engagement is something which auditor issues to client. Letter of engagement is a document. What this document contains? Terms and conditions of audit. Who drafted all these terms and conditions? Auditor. How he drafted? Keeping in mind all the laws and regulations, all applicable laws and regulations for that audit. He kept those points in mind and drafted the terms and conditions on a letter called letter of engagement. This is nothing but agreement. And that will be sent by auditor to client. What client has to do? Client has to read it, sign it, and send back one copy to the auditor. Now the terms are agreed. Now tomorrow if the client is blaming me, dear auditor, you did not do that. Why you didn't do that? I will show the letter. See, you appointed only for me. You appointed me only for this, not for everything else. And you accepted it. So now you can't change your terms and conditions. Moreover, I should not do that work also. I am only here to do audit related works. I only do audit related works. You want me to do stat audit, income tax audit, statutory audit, I will do. You want me to do GST stat audit, I will do. You want me to file GST returns, I will not do. Why? Because filing GST return is a management service. But GST audit, yes, it's an audit work, right? Moreover, it's compulsory audit. Here I am independent auditor. You did everything, so I am checking it. So that kind of works I will accept. So if client blames me tomorrow, this letter of engagement protects me. Tell me logically speak. Logically tell me. Think everyone and tell me. We have two types of audit, right? One is stat audit. Another one is non-stat audit. Where do you think letter of engagement is highly necessary? Where you think letter of engagement is compulsory, must? In this case, even if letter of engagement is not there, it is okay, no problem. But in case of this kind of audit, letter of engagement is must. Non-statutory audit, many are replying statutory audit, that's wrong. Non-statutory audit is an audit where letter of engagement must be given. 1 minute on hold. So in case of non-statutory audit, the chances of disputes are very high. What is non-stat audit? There is no law itself, first of all. I am voluntary calling auditor and we both are working on it. See, if it is a stat audit, no. If at all we drafted our terms wrongly or we don't have terms, we don't have agreement also, but it's a stat audit. In such case, if I don't explain my client what are his rights and duties, what are my rights and duties, if at all client wrongly interprets my rights and duties, there is law to protect me. So I can say client, okay, hello, I'm not responsible for that. If you want to open company law and see, I should not do all that works. I am only for conducting audit. I can prove him through law. Even if agreement is not there, law is there to protect me from my rights and duties, from his rights and duties. Whereas in non-stat audit, who is there? There is no even law. So how can I argue with a client if a dispute comes? If a dispute comes regarding scope and objective of my work, if a dispute comes regarding scope and objective, what is my scope, what is my objective, what is my purpose? If there is a dispute comes on this, what are my rights, what are his rights? If there is a dispute on this, who will protect me? Nobody. So terms and conditions, letter of engagement is very, very, very important in case of non-stat audit. But remember, in practical world, whether it is stat audit or non-stat audit, we will give letter of engagement everywhere. Simply, it prescribes terms and conditions. That's it. So that's about letter of engagement. Now, sir, what are the contents of this letter? Contents of letter of engagement. Now, everybody understood why letter of engagement is required. What is the purpose of letter of engagement? What is the purpose? Tell me. It's a letter sent by auditor to client. Why? To reduce misunderstandings between the auditor and client at a future date. Why do we misunderstand? Why do we get misunderstandings? You may misunderstand regarding scope of the work and objective of the work, or you may misunderstand regarding rights and duties, or he may misunderstand regarding rights and duties. So to reduce the conflict, to reduce the possibility of misunderstanding, you will issue letter of engagement. Now, when you are issuing such a kind of letter, what should be its content? What are all the contents of letter? Contents can be scope and object. I mean, first of all, title will be there, no? Title. So first one, title. Next one, addressee. Addressee, to whom you are giving this letter. Third one, scope and objective of the audit. Scope and objective of audit. So title, what is the title that we keep? Letter of engagement. Addressee, to whom we give this letter? See, in a company, we all know shareholders appoint us, but we are working with whom? Directors. So whom we have to make understand the responsibilities. If directors of the company understood the responsibility, that's enough. So addressee is to board of directors. But if you remember audit report, no, we are giving audit report not for board of directors, but for the members of the company. So in audit report, addressee members. Whereas in letter of engagement, addressee is to board of directors. So this may be relevant for MCQ, or it may be relevant for true or false. So then third one, scope and objective. You requested me to do audit under Companies Act. So I will just mention what is my scope. Am I only for complete company or am I only branch auditor? Scope, objective. I am appointed for conducting audit and to give opinion. That is my objective. Fourth one, my responsibilities. Auditor's responsibilities. Remind. Now you're explaining what are your responsibilities. Now tell them management responsibilities. What are their responsibilities? You tell them. Give a reference to applicable financial reporting framework. What is the financial reporting framework applicable? Just to tell them at the beginning itself, so that if at all they did wrong, no, they'll rectify it. Seventh one, date and place. And eighth one, you mentioned date and place. Now you send the report. Signing by auditor. Auditor will sign and send. Then signing by management representative. Whoever is the representative of the company, he will have to sign. Now this letter, no, 2 copies you will have. 1 copy with you, 1 copy with the client. That is letter of engagement. So what is the letter of engagement? That is given in the question number 16. If you observe, question number 16 we mentioned. Wow, write about letter of engagement. What are its contents? It's a document issued by auditor to client. In non-statutory audit, it is highly recommendatory. Contents of the letter: title, addressee, objective and scope, responsibility of auditor, responsibility of management, reference to applicable financial reporting framework, signature of the auditor, signature of the client accepting the terms, date and place. Now, sir, what are the responsibilities of management? In fact, responsibilities of management is called as preconditions to audit. It is also called as premise to audit. I assume before I start the audit, I have certain assumptions. I can assume certain things. What is the precondition for me to start the audit? What is the basic condition for me to start the audit? The precondition, the premise, the assumption is management has fulfilled. Management has fulfilled their responsibilities. What are their responsibilities? What are the management responsibilities? for preparation of financials in accordance with applicable financial reporting framework. Yes or no? It is management responsibility. For implementing internal controls in the organization, for preparation of financials, they are free from material misstatements. Not only that, when I'm going for audit, to provide me all information I need, additional information I need, I can talk to any person within the entity from whom I may get necessary audit evidence, necessary information. These are all management duties to cooperate me. So these are preconditions to audit, also called as premise to audit, also called as management responsibilities. What are the responsibilities of management? So that's it. I hope everyone understood till now. Can you please reply me in the chat box? Yes. So after, no, I'll give break right after first session. Please read these questions once on your own. I'm 99% I'm covering. So you please read on your own. Now the next concept. Now every one of you would have understood what is letter of engagement. I'll just show you how the letter of engagement looks like. This is there in pronouncements book itself. If you open your pronouncement book of ICI, you can just understand this. In SCA 210, at last of the SCA 210, you can find it. Example of a letter of engagement. You see here. So there is a title here. If you observe, there is a title. Letter of engagement will keep a heading. Addressee to the board of directors of ABC Limited. First, what is the first paragraph in the letter? Objective and scope. Who will request whom for conducting audit? Auditor will not go and beg anybody. Client will request. You have requested. What is that? You have requested that we audit financial statements of ABC Limited, which comprise balance sheet, P&L, cash flow for the year ended, and summary of significant policies and other explanatory information. We are pleased to confirm our acceptance and our understanding of this audit. What we understood about this audit, our understanding about this audit by means of this letter, we are explaining you what is meant by audit. Our audit will be conducted with an objective of giving opinion. Look, my objective is to give opinion only, nothing else. Responsibilities of auditor. The auditor will conduct audit as per standards on auditing, which are issued by ICAI. So because of inherent limitations of audit, we may not detect some errors and frauds. Because of inherent limitations, we don't do audit 100%. What are the responsibilities of management? Responsibilities of management for preparation of financials so that they give true and fair view, for internal control system in the organization, to provide us access to all times books, records kept at head office, branches, elsewhere, additional information, unrestricted access. I can talk to any person within the entity from whom I can get some valuable information. So all that. Finally, we look forward to full your cooperation, and our firm details, firm registration number, membership number, sign it, send them, and the director of the company, he will acknowledge, and then he will give you one copy. He will retain one copy, 2 copies. So this is letter of engagement. Now, we all know there is a provision under Companies Act. We all know that auditors in case of non-government company, auditors are appointed for 5 years at a time. Auditors are appointed for 5 years at a time. Now, for the first time when I'm appointed, first year, no doubt about it. For the first time I'm interacting with the client, first time I'm doing the audit, I must give letter of engagement to the client for sure. Now, my question is, sir, what about second year? What about third year, fourth year, fifth year? Now, it's a recurring audit, for me. It's not one-time audit, sir. Second year, third year, fourth year, fifth year also I'm only doing. Right now, I'm in second year. Last year, I'm the auditor. Current year also, I'm the auditor. Should I once again give letter of engagement? Because already I gave last time letter of engagement, same terms and conditions, sir. This time also, should I give once again? Is auditor responsible to send letter of engagement in case of recurring audit? That's the question. In case of recurring audit, is auditor responsible to send letter of engagement? See, if it is a first time audit engagement, initial audit engagement, you must send. Recurring audit. What is recurring audit? If auditor of the last year is also appointed for the current period, obviously it's a recurring audit. Now, whether in recurring audit, should auditor send letter of engagement or not? Auditor has to think according to the circumstance. Auditor's professional judgment, whether he will issue or not, it's a matter of professional judgment. Okay, sir, it's auditor wish. Fine. What standard says? What standard says regarding recurring audit? Whatever I told right now is what said in the standard. The standard says, in case of recurring audit, should auditor issue letter of engagement or not? It's purely auditor's wish. But what standard says, in the following cases, even though it is recurring audit, even though it is repetitive audit, please issue letter of engagement once again. In the following cases, please issue letter of engagement. Generally, same auditor, same client, not required. Logically speaking, not required. But in the following circumstances, please issue letter of engagement. First and foremost thing, when terms of engagement are changed. Obviously, last time the terms are different, now the terms are different. It is changed. Second, objective and scope of audit changed. Objective and scope of audit changed. Yeah, better you have to once again issue. Third one, the management of the company, there is a change in significant management of the company. You have to issue. When there is a change in nature and size of the business, you have to issue. Or when there is a change in applicable financial reporting framework, you have to issue. Sixth one, there are many other reasons which are out of which. So one is a change in nature or size of the business, change in the terms originally agreed, change in the management, change in applicable financial reporting framework, or change in law or regulation. This is one more reason. Change in law or regulation, or if client misunderstood the original terms. If the client misunderstood the terms, wrongly interpreted, now I need to give a new engagement letter with a detailed explanation of each and everything. That's it. Practically, this is one practical situation. Objective and scope, management change, applicable financial reporting framework. These are the 5 situations generally which are very practical. That's it. So here I have listed out all the reasons. You can even add one more reason, change in objective and scope of audit. That is nothing but changes in the terms originally agreed, which covers objective and scope might have changed, whatever it is. That's it. Fine. Sir, as you said, letter of engagement is auditor responsibility to issue to the client. And what are all the points that we should mention in the letter? We understood now conceptually. Like you must make the client understand what is the work, what is my responsibility, what is his responsibility, all that we must make him responsible. And when I'm doing recurring works, whether should I issue engagement letter or not also, I understood. Sir, this is a situation. Suppose client has appointed me, initial audit engagement. First time I'm doing audit. Over phone call, we discussed everything, sir. Now, as a formality, as which is already there under SA 210, as a formality under SA 210, I issued letter of engagement to client, sir. I issued to the client letter of engagement. The client saw letter of engagement, read every term and condition. In that, the client read management responsibility points, sir. In the management responsibility, he read management is responsible for preparation of financial statements. That point is there, sir. The client is now asking me to do that work with the auditor. The client is now asking me to do that work. He don't want to prepare financials, sir. He want me to do that. After reading the letter only, he is asking me. So the client is asking me to change. Terms of engagement. Now, how should I do? What should I do here, sir? If the client is asking me to change, I sent the terms, sir. Now he's asking me to change the terms. What should I do? You have 2 options. Either to accept the terms or reject the terms. Whatever the request, client is requesting, right, to change the terms. There is a request from the client, right? Now, how will you deal with that request? You may accept the request or you may reject the request. When will you accept the request? If the client request is reasonable, justifiable under law, accept it. If the client request is unreasonable, not justified under law, don't accept. Suppose in our example, client is asking me to prepare financial statements. That is not justifiable under law, not reasonable. Independence of mind will affect. So I will reject. Suppose if the client is asking me to change terms and asking me to do tax audit also additionally. Is tax audit prohibited under law? No. Company audit, stat audit, tax audit, stat audit. Here I'm independent, there I'm independent. So tax audit is permitted. So it is reasonable, justified in law. I can change and accept it. Suppose no, if a client requested me to change terms and I accepted the new terms, why should I keep old letter? I tore up the old letter. New letter I will draft with the new terms of engagement. I will issue new letter. He will sign and send me back a copy. Happy, cool, chill. Suppose I rejected because it is not justified in law or unreasonable. I rejected. Client also hurted, and he is not permitting me to do audit. He is not cooperating me. He's not lifting my phone call. I want to start audit. He's not letting me to talk to anybody. Okay, no problem. I will resign from the audit. That's called withdraw from the engagement. I will withdraw from audit and communicate my resignation letter to top management of the company. That's it. That's it. Sir, why do client request for change, sir? What circumstances? Maybe changes in terms and conditions, or he misunderstood originally whatever we discussed over phone call, changes in circumstances, whatever it is. Or he want to restrict my powers, or he want to increase my duties, whatever the reason. That's it. With this, part 2 of the chapter is also completed. All that points have covered until here. Changes in terms, acceptance of change, non-acceptance of change. If the client is not accepting and he is not letting you, withdraw from the engagement, the contract, whatever is there, withdraw. That's it. With this, nature, objective and scope. In fact, we covered right now SA 210 standard is completed in full scale. We have discussed SA 210. Okay, now suppose no, you did not even accept the audit. Let us assume you did not even accept the audit. You and the client are still at the initial stage of discussion. You both are at initial stage of discussion. You have not yet accepted the audit. Prior to the engagement acceptance, client is keeping so many limitations on your powers. Client is keeping so many limitations. I did not even accept the audit. Before I even accept the audit, is keeping so many restrictions. What should I do? Don't accept the audit. Then auditor shall not accept such audit. Sir, what if I accepted the audit? Then the client is putting limitations. Resign from the audit. Very simple. If before accepting he is keeping limitations, don't accept. Why? Because of limitations, I may not get sufficient information, evidence I want. Hence, I cannot get reasonable. I don't get confidence on the company. I don't understand anything about the company. I may give wrong. I may not give any opinion. Disclaimer means I don't give an opinion. I will tell you what is disclaimer in audit reporting chapter. That's it. So with this, company audit is fully, this nature, objective and scope chapter is fully completed. SA 210 and SA 220 procedure, both are completed. Then we still have pending part 3. What do you mean by independence? So independence of mind, independence of appearance, what are the threats to independence, what are the advantages of independence, all that I am going to discuss this after we finish company audit. Okay, I will come back to this and discuss it after we finish company audit. So until now, I hope everyone are confident. I hope everyone are confident. Please reply. Yes. Just a few seconds online. So getting back. So now So now we will start company audit. Okay, now we will start company audit. Company audit will discuss, and then we will discuss audit reporting, then documentation, then later on, somewhere in the 8th chapter, risk assessment topic will discuss, then we'll discuss audit strategy planning and all. Generally, audit planning, risk assessment and all, at various places, they discuss it first, which is not correct at all. Because no, you can plan a work only when you understand the work. In reality, when you can plan a particular work, how do you know, how do you understand planning a work? If you know the work, you can plan the work. Which means in order to know how to plan, first I must know how to work. So first we are discussing how to work. Once we understand working process, then it is very easy to understand planning process. So that's the reason I'm discussing in the practical point of view. Okay, now. So company audit. It is nothing but you have a chapter. I mean, in ICA study material also, the chapter heading is company audit. So here we are going to discuss 138 to 147. These are the sections we have. Not even 147. We even have 148 also. Cost records, all that. But I'm not going to explain cost records concept. See, you can find some other YouTube videos online. Okay, so I'm not explaining cost records, cost audit concept because not at all relevant for us. But they are in syllabus, but not relevant for us and easy. After we discuss all these provisions, you will only feel it is very easy. Okay, 138 to 147. What is 138? Internal audit. 138 speaks about internal audit. 139 speaks about appointment and reappointment of auditors. Appointment and reappointment of auditors. 140 is about removal and resignation of auditor. Removal and resignation of auditor. 141, qualification and disqualifications of auditor. 142, auditors remuneration. 143, rights and duties of auditor. 144, prohibited services. 145, duty to sign. 146, duty to attend general meetings. Duty to attend general meetings. 147, penalty for prosecution. These are the sections which we are going to discuss now. Almost 10 sections we have to be discussed. Now, by the way, CARO reporting and all will come in audit report. Don't ask me whether do I tell CARO or not. Ask me whether I'm going to teach about audit report or not. In audit report, one paragraph is there. Inside that paragraph, CARO is one para. That's it. CARO is not audit report. CARO is just one part of the one element of the audit report. I'm going to tell you how everything works. Okay, just wait for its turn. Once we finish company audit, then we will discuss that. Now, first let us understand who can be appointed as an auditor, who cannot be appointed as an auditor for a company. What is a company? First of all, a company means a business that registers under Companies Act. A business that registers under Companies Act is a company. If a business organization that registers under Companies Act is a company, simple. So, substance over form, company, firm, LLP, everything is same. It's just a business. Only thing is, if you register that business under Companies Act, it's a company. If you register that business under Partnership Act, it's a partnership firm. If you register that business under LLP Act, it's an LLP. If you register that business under Societies Act, that's a society. If the business is not registered anywhere, you and your friends together started business not registered anywhere, it is simply AOP or BOI. Okay, so company means nothing but a business that registers under Companies Act. Now, to this company, audit is mandatory. Audit is mandatory. Every year, every financial year, the financial statements of these companies must be audited. By whom? Who are eligible to be appointed as an auditor? Who should not be appointed as an auditor? 141 section speaks about that. Now, if you look at 141, it has totally 4 subsections. Subsection 1, subsection 2, subsection 3, subsection 4. 141 subsection 1, qualifications of auditor. 141 subsection 3, disqualifications of auditor. 141 subsection 4, disqualifications after appointment. Disqualification arises after appointment. 141 subsection 2, Who shall sign? Who shall sign in case of partnership firm of auditors? Suppose if the audit firm we appointed is a partnership firm, in that case, who should sign the auditor's report? That's the section breakup. Now, what 141 subsection 1 says, who can be appointed as an auditor? See, as soon as you qualify chartered accountancy, you can either enter into a business, your own business, or you can enter into our profession. In the profession we have two things, like you can either go for employment, or you can set up your own practice. You can set up your own practice. Practice means practice CE, not SE. So many you have to understand the difference. Practice CE, not SE. Okay, so you may enter into practice. How you enter into practice? Once you qualify CA final examination, once you completed GMCS programs and all, okay, now you need to pay some amount of fee to the ICI for applying membership of the ICI. Then along with that, you need to apply for COP. So by paying the fee, you will get membership number and certificate of practice. So that certificate is a proof that you are eligible to practice as a chartered accountant. Then only you are eligible to use the word CA everywhere. Okay, so that is COP. Now, with ICA, you can, now ICA will ask you, do you want to practice as a sole proprietor? Means individually you want to practice on your own, or do you want to practice as a firm? Only two options are permitted. Do you want to practice as a company? Company form of organization is not permitted for practicing people. For every profession you take, company form of organization is not permitted. Lawyers you take, engineers you take, whoever is practicing, they either practice sole proprietary or they practice as a firm or LLP. So ICA also gives only two options. Either you can practice as a sole proprietor, or you can practice as a firm or LLP. Okay, so you, whatever the one you want, you select. So you may select a sole proprietary firm, or you may select a partnership firm. In both the cases, you will be given FRN number, firm registration number. Okay, your entity, your audit firm is identifiable. You have a registration number. That's it. Now, so under 141 subsection 1, who can be appointed as an auditor? Either an individual who is a chartered accountant having certificate of practice. A person who is a chartered accountant and having certificate of practice, he can be appointed as an auditor, or a partnership firm or an LLP. A partnership firm or LLP, they can be appointed as an auditor for our company as an auditor, provided majority of the partners, look at the word, majority of the partners are chartered accountants having certificate of practice. The word majority indicates the partnership firm we are appointing, that partnership firm may have cost accountants as partner, secretary as partner, lawyers as partner, but out of total, suppose if there are total 10 partners, 6 must be CA with COP. If it is 11, 6 must be CA with COP. If the 12 partners, 7 must be CA with COP. Majority must be CA having COP. Only then that firm or LLP is eligible for appointment. So if a company comes and asks your firm, will you be our auditor? You need to check as per SU 220. Am I eligible? Ethically I'm satisfied or not ethical requirements. Then you need to give me your acceptance. And you need to give me declaration that you are qualified and not disqualified. So that's qualification. Now, what 141 subsection 2 says, if a partnership firm is appointed as an auditor, if a partnership firm is appointed as an auditor, any partner who is a chartered accountant having COP, remember, any partner, you should not stop, any partner who is a chartered accountant having COP, or only that partner who is a CA having COP shall sign the financial statements and auditor's report. The audit report shall be signed by which partner? In case we appoint a partnership firm, sir, any partner can sign. No, that's wrong. Not any partner. Only that partner who is a chartered accountant having certificate of practice. Only he can sign the auditor's report. Only he can sign the auditor's report. Now, so any partner who is a CA having COP can sign the audit report. Now, so that's about 141.1, 141 subsection 2. Now, sir, who cannot be appointed? What are the disqualifications? 141 subsection 3 speaks about disqualifications of an auditor. It says the following chartered accountants, the following are all chartered accountants, but though they are chartered accountants, they cannot be appointed as an auditor. They cannot be appointed as an auditor. Remember, you need not remember the entire list. Unnecessarily, don't waste energy on that. Understand each and every point. That's enough. People try to remember all the points at test stage. Who will ask you that question? Is I say asking list out all the disqualifications? No, right? They test on one disqualification. So don't try to remember each and everything. Try to understand and analyze each and everything. There are so many cheat codes or mnemonics available. How to remember all that? Who will ask that? First of all, did any exam, are they asking any question on how to remember? I mean, are they asking to list out all the disqualifications? There are 10 disqualifications. Are they asking about that? No, they are testing on one disqualification. One practical question they'll give, that they'll test, and that we will ignore and we remember all. So learning approach should be different. Okay. The first one, a body corporate is disqualified. You know, Companies Act need not tell that. ICI directly disqualifies. We chartered accountants can register as what? Either as an individual or as a firm. Only that's how we can operate. You are saying already under 141 subsection 1, either individual or partnership firm or LLP. Only these are eligible, you are saying. You need not even tell me body corporate is disqualified. But then we are expressly saying body corporate is disqualified other than LLP. Because no, LLP is a body corporate as per LLP Act. But for the purpose of 141 subsection 3, LLP, we don't treat it as body corporate. We will keep it as eligible. LLP is eligible to be appointed as an auditor. Second one, officer or employee of the company is disqualified. Officer of the company, employee of the company is disqualified. So officer and employee is disqualified. Officer definition under Companies Act. Who is an officer? You see here. Officer includes any director, manager, or key managerial person, or any person in accordance with whose instructions the board of directors or one or more of the directors are equipped to act. So who is an officer? Officer includes who and all? Officer includes director, key managerial person, or any person at whose instructions these directors follow. Example, CEO, chairman. So these are all the examples of the persons who can control board of directors. Getting it? So he is also officer. Now they have used another word called key managerial person. Key managerial person. So who is a key managerial person under Companies Act? Key managerial person under Companies Act. Who is a key managerial person? Look at here the definition. CEO of the company is a KMP. Company secretary is a KMP. Whole-time director, CFO. Actually speaking, you need to take CEO, secretary, CFO. These alone, if you take, that's enough. So CEO, CFO, and company secretary. These are the key managerial persons under Companies Act. So officer includes director, KMP, and any person who can control directors. In addition to that, CFO and secretary, they are also officers of the company. These officers cannot be appointed as an auditor. Not only that, employee of the company, employee is my agent. Auditor should be independent. Auditor should be a third party, not belonging to the company. So employee is also disqualified. Third one, not only officer and employee, relative of an officer or employee is also disqualified. Not relative of actually they say relative of director or key managerial person. Relative of a director or key managerial person is disqualified. Relative of a small employee, yeah, he can be auditor. TCS, no, they have 5 lakh employees. In that, one employee is there, just recently recruited, 20,000 salary per month, BTech graduate. I am his relative, I am his brother, I am a chartered accountant. Let us assume TCS approached me to conduct audit. I can accept, because no, this my relative who is there in the company, he doesn't have any influence on the company. The company want to protect independence. See, for whom I should not be a relative, director or key managerial people, I should not be relative because they can influence them, because they can influence the company. So I cannot be relative to them. Small employee, I can be relative logically. Fourth one, partner. Partner of an officer or employee. Employee of an officer or employee, disqualified. Partner of an officer or employee is disqualified. Employee of an officer or employee is also disqualified. Suppose one of the director of the company has a business outside, I'm me and the director are business partners in some other business, I am disqualified. Or under the director, I am working as an employee somewhere, I am disqualified for this company. I am disqualified for this company because that director of the company, because he is my partner or because he is my employer, he can influence me. My independence of mind will affect. Therefore, I should not be appointed as an auditor. So look at body corporate is disqualified, officer or employee is disqualified, a partner of an officer, employee of an officer is disqualified, or a relative of an officer is disqualified. Nothing but relative of director or key managerial person is disqualified. Next. Now this disqualification, now I'm going to tell is very important. Any person or his partner or his relative, any person or his partner or his relative is holding any security, or interest in the company, holding company, subsidiary company, associate company, sister company. What is sister company? Actually, if you look at the law, no, the word is subsidiary of such holding company. Subsidiary of such holding company. That company, I wrote it as sister company. Fine, I'll explain. What is the provision? Any person, means I am the auditor, Mr. A, I am the auditor, or my partner P, or my relative R. Any person, the auditor or auditor's relative or auditor's partner, proposed auditor. I am not the auditor of the company, I am proposed auditor. Company won't appoint me, but me or my partner or my relative, if at all any of us are holding any security in the company. Security is a very big definition. Security includes shares, security includes bonds, security includes debentures, security includes units, security includes derivatives. If I'm having anything in the company, any interest in the company, not only that company, suppose actually Tata Consultancy Services is the company that approached me. Me means that person A. Tata Consultancy is approaching me, Mr. A. I should not have security in the TCS, in its holding company called Tata Sons, in its subsidiary company called Paytm, let us assume, in its associate company called Tata Motors, its sister company called Tata Steel, let us assume. Tata Consultancy Services have 29 sister companies, 29 big sister companies. Okay, so either me or my partner or my relative, if at all any of us are having securities in the TCS or its holding company or its subsidiary company or its associate company or its sister company. What is sister company? Subsidiary of the holding. Suppose I am Tata Consultancy, I have holding company. That holding company has another subsidiary. Means me, that subsidiary, my company and that company, for both of us, holding company is same. We both are children of the same parent company. So we are sister concerns. We are called as popularly sister concerns. Now, I can appoint a person as an auditor. Only if that person, his relative, his partner don't have securities in my company, my holding company, my subsidiary company, my associate company, my sister company. Only if they don't have securities in entire group companies. In our group companies, they should not have securities. Then we can appoint that person as an auditor. If at all that person is having any single share, no, disqualified. We should not appoint him. Now you may get it out, sir, how do we know whether that person is having shares or not? We will take a declaration. We will not directly appoint him. We will take a declaration. Give me a declaration. Sign the declaration and give me that you don't have any securities, and he will sign and give you. Now you may get another doubt. Sir, what if we give a wrong declaration? If at all he was caught later, he will be punishable under law severely by ICAI. It's a professional misconduct against code of ethics. So he will be punishable. That's it. So he should not lie. Simple. Now there is an exception. There is an exception. What is the exception given? The relative of such person. Relative of such person. Such person means what? In our example, Mr. A. The relative of such person can hold securities up to a face value of rupees 1 lakh. A relative of the person can hold securities up to face value of 1 lakh. Face value of 1 lakh is very bigger amount in market value. Okay, in market value, none of the stock. Face value is more than 10. In stock exchange, you take any company you take for the matter, face value is maximum 10 rupees. Either 10 or 5 or 2 or 1 denominations. These are the 4 denominations of face values. Okay, so up to a face value of 1 lakh. So relative of such partner, such person, the person, he can hold securities up to 1 lakh. Remember, relative only have this 1 lakh limit. Suppose I am the auditor, I am holding 10 rupees worth of share, I am disqualified. My partner is holding, disqualified. My relative is holding, eligible. Up to 1 lakh face value, it is eligible. Now, sir, 1 lakh face value is there, right? Now, 1 lakh face value, how this 1 lakh face value, sir? Is it for each company in the group, or is it for all companies in the group? All companies in the group. Suppose, no, my relative one is having shares in TCS. I am the auditor for TCS. By the way, I am the auditor for TCS, but my relative is having shares in the TCS, face value 10,000. My another relative is there. I have another relative 2. So he is having shares in Tata Motors. Tata Motors is an associate company. He is having in Tata Motors 20,000. Another relative is there. Another relative. He is having in Tata Steel. He is having in Tata Steel 30,000. Another relative is there. He is having in Tata Sons, having 40,000 shares. Another relative is a relative 5. He is having shares in Tata Power, some 10,000. Now I am arguing, sir, none of the relative is having more than 1 lakh. So I am eligible. No, total all this. All your relatives in all the group companies together. TCS is that company. This is associate company. This is the sister company. This is holding company. This is sister company again. Okay, now total it more than 1 lakh. You are disqualified, Mr. Auditor. You are not eligible. So cumulatively you have to see. That's it. Then it's not company wise. It's not company wise. That's it. Next, in the same provision, next disqualification. Securities interest related point is fully done. I hope everybody understood. I hope everyone understood. Next one. Same, any person or partner or his relative. Next provision, any person or partner or his relative is indebted to the company, holding company, subsidiary company, associate company, sister company for more than 5 lakhs is disqualified. See, I'll tell you one point here. Everyone writes auditing paper. They write correct answer, but still they don't score well. They won't get full score. And they think ICI won't give full marks, but actually wrong. Suppose if the same question is asked, no, security related question is asked. How majority of the students write, any person holding securities in the company is disqualified. In the given case, so and so person is having shares in the company, so disqualified. That's how they write. But actual answer is what, relevant provision. As per the provisions of Companies Act, any person or his partner or his relative is holding any security or interest in the company or holding company or subsidiary company or associate company or subsidiary of the holding company, then he is disqualified. However, relative of such person can hold securities up to a face value of rupees 1 lakh. This is the actual provision. But how the students write? According to Companies Act, if a person is holding shares in the company, he is disqualified. However, relative can hold securities up to 1 lakh. This is how students write. Whereas the answer is actually this. How do you get full marks when you write incomplete answer? There are 5 companies listed here: company, holding company, subsidiary company, associate company, sister company. You did not even, you have not even wrote 2 or 3 company names also. Only one company name you mentioned. One student approached me, sir, I wrote correct answers. I did not get, sir. He only put 1.5 mark for 4 marks answer. Why, sir? I'm writing correct answer. No, his answer is like this. He didn't write complete provision. Only if you write complete provision and complete answer, you will get full marks. Not just for correct answer. Complete answer is important than correct answer. So here also indebtedness, any person means the proposed auditor whom we want to appoint, or his partner or his relative is indebted to the company or holding company or subsidiary, associate or sister, nothing but group companies, for more than 5 lakhs disqualified. Here also indebtedness auditor can have, shares auditor should not have, partner should not have, relative can have up to 1 lakh. Whereas here indebtedness can be by auditor or by partner or by relative. All of them, to all of these companies, how much total it, aggregate. If it exceeds 5 lakhs, auditor is disqualified. If they are indebted to the company, auditor is disqualified. Sir, what do you meant by indebtedness here? What do you meant by indebtedness here? Issue number one. Auditor purchased in ordinary course of business, not specially. Ordinary course of business. This is a company, this company sells car. Okay, so the company also provides finance. Not this company. The sister company will provide finance. The company has a subsidiary. That company will provide a finance to whoever is the buyer of the car, the subsidiary company. So the subsidiary company gave me some 9 lakhs or 10 lakhs loan to buy a car, and I purchased a car of that company. The subsidiary company gave me 10 lakhs loan for purchasing car. Not for me. For every customer also the company is giving the loan. I am not special. For me also they gave me like same way. Now is disqualification applicable even now? Yes, disqualification applicable. The law says if you are indebted, you are disqualified. How you are indebted, ordinary course, extraordinary course, doesn't matter. You are indebted, that's it, disqualified. Issue number 2. I purchased goods on credit for 30 days credit. 30 days credit. The amount is 7 lakhs. Company generally give 30 days credit. For me also 30 days credit only they gave. Is disqualification applicable? Again, yes, the answer. It doesn't matter. Credit period given to other customer and for you it is same. Doesn't matter. Are you indebted? That's it, disqualified. Because if you are indebted and if you are auditor, you can influence the company and write off your debt. So indebtedness is completely not permitted. Issue number 3. Okay, sir, I don't take any indebtedness and all. No, I don't want anything. Company agreed to pay me rupees 10 lakhs remuneration. The company agreed to pay me rupees 10 lakhs as a remuneration. The company agreed to pay 10 lakhs as remuneration. Now tell me, sir, but no, I don't know whether company will pay me later or not. I took entire 10 lakhs as advance at the beginning only. I did not even start my audit. I took entire 10 lakhs as advance. Remuneration has been taken by me in advance. Now, is disqualification applicable? Yes. If auditor takes his remuneration in advance, it is indebtedness. Sir, it's my remuneration. No, but you did not provide work. No. Where did you render the service? If you render service and take amount, no, okay. You did not render the service. No. How can you take this amount? So which means when I am rendering the work, can I take remuneration? You can very much take. That's called progressive basis. That's called progressive basis. If an auditor is taking his remuneration on progressive basis, means completing some percentage of work and taking remuneration, that is permitted. That is not treated as indebtedness. That is not treated as indebtedness. Then issue number 4. Okay, sir, remuneration also I don't take. Only I will complete the work and then take the remuneration. But no, this company has so many branches across India. I need to travel there and here. I need to send my articles there and here. Now I took advance for audit expenses. Traveling expenses, all that. Company paid me 7 lakhs advance for audit expenses. Now also disqualification applicable? Yes, again it is applicable. Yes, it is applicable. Sir, for audit expenses, is it applicable for audit expenses? It's not for me, sir. It's for the company purpose. Of course, man. But you are only one who is taking. No. Have you incurred money? Did you spend the money? No, right? Without spending, you're taking money. How? This is advance. Sir, Suppose, can I spend the money and take? That's reimbursement you can take. Suppose you spend 5 lakhs, take 6 lakhs, only 1 lakh, no. Additional amount you took, indebtedness. You spend money and then take money, no problem. Without spending, if you take, it's an advance. Advance means indebtedness. So if you take advance means it's indebtedness. That's it. Best thing is what, tell client to book everything, hotel, rooms, flight tickets, everything. Why you take advance? Tell client to book everything. So there is no advance itself, no. Whether you take for audit expenses, whether you take in the form of remuneration, whether you purchase goods on credit, whether you take any loan, you're disqualified. That's it. Next, another issue in the same any person, partner or relative, if at all they are given guarantee or security in connection with a third party, in connection with some third party, for on behalf of some third party, we give guarantee to the company or holding company or subsidiary company or associate company or sister company for more than 1 lakh, disqualified. If you give guarantee to the company, also disqualified. You are indebted to the company for more than 5 lakhs, disqualified. You are having securities in the company, you're disqualified. However, your relative can have securities up to 1 lakh face value. With that, one more major disqualification we have discussed. One more major disqualification we have covered. So someone is asking, any gifts received from company? Gift received from company is a part of remuneration. Whatever you receive, it's treated as remuneration. It is treated as remuneration. That's it. Why do client give gift here? What is the only relationship why you are getting the gift? The auditor relationship. Because of that relationship, whatever you get, it is treated as part of remuneration. That's it. In fact, as per code of ethics, you should not accept gifts. You should not accept. Whether you call it as gift or anything, any name you call it as, it is treated as remuneration. Simple. So with that, one more major disqualification we have completed. Let us do one thing. I'll take a break up to 11:30. Then again, I will start the session. Okay. So we still have some 4 or 5 more disqualifications to be discussed. Sir, if auditor has received a salary of 1 lakh in advance, why do auditor have salary? First of all, remuneration he will be there. Okay, of course, he is disqualified. Salary won't be there. No, auditor, no. Why salary will be there? First of all, he is not employed to get salary. Remuneration. Remuneration, if he has taken up to 5 lakhs, no, that's okay. Beyond 5 lakhs, simple. If indebtedness is more than 5 lakhs, disqualified. Facility provided by client above 5 lakhs is also disqualified. What do you mean by facility according to you? Facility provided is treated as remuneration. Facility provided by the client, getting it, that's not advance for you. That is not treated as indebtedness. Facility provided is not treated as indebtedness. That's okay. Facility is not treated as indebtedness. It's a perquisite. It is treated as remuneration only. But you are not taking any money, right? It is not indebtedness, right? Facility provided, company, how will they expenses account debtor to bank account. Auditor account debtor to bank. They don't write that journal entry. It's not advance. They have not given you anything additionally. That's it. So with that, most of the issues are covered. Still, we have some 4 or 5 important disqualifications. Though there are 4 or 5, there are 2 disqualifications which are very important. One is business relationship disqualification. Another one, prohibited services related disqualification. So that I will cover after break. So come back again by 11:30. So I'm not going to end the meeting. Okay. So, but YouTube live, I will stop. YouTube live, once again, I will generate for the next session. So carry on, take break.